Good evening, everybody. Sorry for the delay. Trying to get the right links in here. So, which is good. We're getting a lot of interest in the Triple T training. And so, for those of you that have done some of the trainings in the past, whether it was the basic 2-day training, this is going to be a refined extension of that information where how the T line in conjunction with the candlestick signals and patterns just dramatically improve the probabilities not only of being in the right trade, but making the analysis of being in the right trade that much easier. So as we can see what happened on Friday, the Dow stayed just above the T line, kind of used it as support. The NASDAQ kind of traded right on the T line and bounced back up. So this made the analysis of what the markets were going to do very simple. And because of the doji, knew that if they opened up positive and traded positive, which was what was indicated in the pre-market futures, we knew right off the bat that if it was opening positive, we could be buying much more aggressively on signals and patterns that were working. So FT, I think this is a more extensive training. That was kind of a 1-day session. This is a full 2-day session. And I do have all the things that we will be doing in it. I don't want to use up too much more time, but we're going to be showing all the truisms on how the T line confirms when to get into positions, when it confirms patterns, the exact entry strategies. Oh, was it a 2-day in April? Okay, then that may be it. I can't imagine me talking 2 days back then. How to use it for stop losses, when to exit trades, and then some of the basic observations of what happens after a big reversal signal away from the T line, that type of thing. You became a lifer today. All right. Good to have you, and hopefully you'll get a lot more out of it than you can imagine. So the fact that the NASDAQ traded higher today and the transportation index traded higher, and you add one more, the S&P 500 traded higher. Now remember what happened on Friday. The Dow, although it traded positive, opened and traded lower most of the day. It did finally come back up on the close to where it was up 35 points. But that was an indication that maybe the markets were not as strong as what we would like to have thought, that there was a little bit of inconsistency with the buying, which told us we were likely to be in a choppy market, which obviously Friday's trading, I guess that was Thursday's trading, Friday's trading gapped down and traded higher. But today you had positive trading in all four of the major indexes, the Dow, the transports, the S&P 500, and the NASDAQ. What that really confirmed was the fact that we were above the T-line, or staying above the T-line. That allowed us to, again, be a lot more confident about going into positions. Now, things like this type of pattern setup. Look at the scoop pattern. Look at your doji gap up. Look at your close above the T-line. Look at your doji sandwich breakout of the handle. This is what we call convergence analysis, or basically 2 plus 2 analysis. The more pieces of information we can put into our analysis, the higher the probability this price move is going to be working. So the fact that we had a scoop wasn't necessarily an indication until we saw this, until we saw the scoop setting up, and that became our handle. You can see that same thing setting up here on this one. Kind of a flat handle. Look at your scoop. Where's your slingshot effect likely to take you? Up here. So Trader Abe was pointing out today that this one was really moving well, and it was moving so well I'm having a hard time illustrating. Look how this one started with your scoop pattern, inverted hammer. That's your blast off. This is why this is a cradle pattern. Not really. That's just kind of a reversal. You could put it in the cradle pattern category, but it's whatever you want to call it. You can see you had a down day, doji gap up, bullish confirmation, and that you had the additional analysis that a scoop pattern was taking place. So anytime you see these patterns, well, that's kind of a little scoop pattern here, kind of a flat handle, where do you think your slingshot effect is going to take you? Probably up here to this moving average. So these are things that you want to have in the back of your mind, or at least be aware of. Well. Kind of a flat handle, scoop, and then look what happened after that scoop. So these are the things that tell us or show us what usually happens with investor sentiment by just identifying a pattern that's setting up. Steve, that's a whole different question for our options training evening, but that is going to be up to each individual, whether you buy in the money, at the money, or out of the money, and whether you're buying options that expire in a week, 2 weeks, 3 weeks, 5 weeks. That all is predicated on each person's nature, meaning how risk tolerant they are. So if I saw something like this and saw it was a scoop, maybe I'd buy something 2 weeks out, maybe 3 weeks out. If I thought it was going to be a very quick move up to here, maybe I'd do a spread that expires in less than 2 weeks. On this level, yes. This is what we're looking for. Or that was confirming what we were looking for. That this was your scoop pattern. You could still be buying this because now you can see it's breaking out through this level. So this is where, remember our kind of logic based upon the Japanese race traders. You're buying the signals when they're down here in the oversold area. You're usually buying a pattern when it's breaking out, when it's already in the overbought area. No, not necessarily. RW, we don't even care about Elliott wave. The only thing we can glean from Elliott wave is that prices move in waves. And I'm usually not going to stick around for wave 3, 4, 5, 6, 7, or whatever. I'm looking at what wave I'm in now, and when that wave is over, I'm moving on to something else that is now also creating another wave. So what am I taking a look here? So this is one of your major patterns. Oh, this stuff gets so small. Kind of a scoop pattern on NXTC. So what's that tell us? After a lot of flat trading and everybody giving up, and all of a sudden they start coming back in, that's when everybody gets excited and creates this strong price move. I'm going to go down through what we have been recommending for a while just to kind of confirm why these patterns work effectively. We can see FLGT came out of this fry pan bottom, consolidated, and then boom, it took off again. And where did it take off? Right here at the T line. Telling you that was a good area to be getting in. HIB we recommended because of the J hook pattern. Right here was telling us that we are now going into wave 3. So this is wave 1, wave 2, wave 3. Now, do I count that as Elliott wave? No. If this goes up here and backs off, this is now wave 1, wave 2, seeing if it's going to go into wave 3. Goose was another one. Look at your J hook pattern refined, a bobble breakout. And a bobble breakout is merely a J hook pattern where you can see where it's resisted. You can see that it's supported on the T line. This is where you could be buying. Now, before candlesticks came along, if I happened to be lucky enough to be in a trade and I got out, I wasn't going to get back in because they weren't going to get me back in and get me in here and have it go back down again and take some more of my profits. No way. At least now I know what patterns to expect. That if I get out over here because it failed at the 200 and I see that it's supporting, I'm buying back over here knowing the prospects of the next wave, whether it's wave 1, wave 2, wave 3, doesn't matter. We're still in an uptrend above the T line. Do you recommend waiting for the pullback after a long run? Yes. I wouldn't be buying here. I wouldn't be buying here. I wouldn't be buying here. But I would be buying here because I could see what pattern was setting up. What else did I have here? Did I do this one? Yes, that was the, okay. Oh, I'm over here on this list. SPWR. After your breakout of this level, this has been acting very well. Now, notice where we are. We climbed up in the overbought area. It's gone from 10 to 16 in 2 weeks, a 60% move. What is our alert that we should get ready to start taking profits? Well, first of all, you could probably draw a line right up through here, so we're getting near the top, number one. Number two, we're getting up in the overbought area. But most importantly, look how far away we're starting to move from the T line in the overbought area. That's where you start getting ready to take profits with a much higher degree of probability. Sonu, there's your bobble breakout. And here's an important factor that we're going to be going over on our weekend training on the T line. Remember, when they come back to the T line and they bounce back up, that's just that much more evidence that this is a natural support and resistance level of human nature. Why is that? Because nobody has the 8 exponential moving average or the T-line on their charts. So it's not like everybody's waiting for it to go back to a major moving average. When it hits here, everybody's saying, oh, it's hit the T-line, because percentage-wise, nobody has the T-line on their charts. We just happen to use the T-line because it does illustrate where the natural support and resistance level of human nature is. And if you watch the T-line, you'll be amazed at how often the T-line is the exact pullback point of a price move. We recommended DQ. Look at your kind of little J-hook pattern gap up through that resistance level. Same scenario though. Look how far away you're starting to move away from the T-line. So we're going to be a little bit more alert about taking profits up here. PEIX, observe the obvious. They break out through there. You've got wave 3 of this J-hook pattern working. So the benefit you have with trading the patterns is that not only is it going to have a good probability of moving in the right direction, but the magnitude of the move is usually going to be pretty strong. Here is the classic reversal signal. Convergence analysis. A bullish engulfing right off the 50-day moving average, closed above the T-line, stochastics starting to head up. If it opens positive, what are the pieces of information we're getting right away? 1, it's confirming our bullish engulfing signal, one of the 12 major signals. 2, it's telling us the T-line's not going to act as resistance. And 3, it's breaking this little downtrend. So what can we assume off of this trade? Wave 1, wave 2, going into wave 3, the same magnitude as wave 1. I can pretty much guarantee, after decades of trading in candlesticks, that if you buy the signals and patterns as we recognize them, especially at levels that everybody else is watching, the probabilities of you making money is going to be extremely strong, like 70% or even greater. BNTX, you can see the fry pan bottom, you can see the left-right combo, Morningstar signal, and the breakout. Now, the advantage of us being able to see this pattern is we know that there's a pattern breakout ready to occur right here. Where do you think everybody and their brother is watching? They're waiting to see whether the 50-day moving average is going to act as resistance or not. We can see right away that as soon as it goes through, it's confirming this pattern as well as breaking out. We're buying in here, or at least right on this day, and everybody else is waiting to see if it's going to confirm by staying up. And when they see it, what do they start doing when they see it's going to confirm by staying up? They're buying. They're just buying later than being able to use the candlestick signals to tell you it is definitely time to get into that trade. DTIL needed to stay above the T-line. So this is where the J or the doji becomes a very powerful indicator. What did we need to see today if you were long to stay long? The doji rule is going to move in the direction of how they open it after a doji. The fact that they've come up through the 50 and kind of wallowed along here at the 50 and now showing that it's going to support here, where's the next logical target? Up here at the 200-day moving average. Why is that? Because people that aren't even trading candlesticks, and why they don't, I have no idea. The fact that they see that it's supporting on the 50 says, oh, they're supporting here, I'm going to be ready to buy. We're just happen to be a couple of days ahead of them. And beyond meat, look at the probabilities. Oh, pshaw. Kind of your big fry pan bottom. hit a support level. There's your J-hook pattern. And where was your resistance level? Somewhere right in here. And they're trading above that level. What's that imply? This fry pan bottom pattern is breaking out. So a lot of people say, well, it's up here in the overbought area. What's our simple rule of the T-line coming out of a fry pan bottom? If you see a fry pan bottom developing, you can stay long as it stays above the T-line. SRNE, simple trend analysis. You stay long as it stays above the T-line. What are we seeing developing? There's our trend channel. So where do you think the next target's going to be? Probably somewhere up along the top of that channel. Apps, kind of the same setup right here. That breakout as we saw on our recommendation of HIB. Right here was a breakout. And Cardiff. Same scenario. You're in a strong uptrend. And what's that tell us? That we can stay long as this stays above the T-line. Where's the next likely target? Well, if this is a trend channel, I'd look for it to have a strong move up in this direction. Link, fry pan bottom, you just stay long. And SGMS also at 45 degree as long as it stays above the T-line. Do you have a preference between continuation breakouts versus reversals? Easier to scan for? Well, the reversals are obviously easy to scan for. But the problem with finding an oversold stock that's showing a reversal when a market is in a steady uptrend, there's a little bit of divergence there. If you're looking at a stock that's in an oversold area starting back up when the market's been moving up steadily, that means that stock or sector isn't performing well. So what are we looking for in that uptrending market? We're looking for the patterns, the J-hook patterns, the fry pan bottom breakouts, things that are acting well and now just about ready to explode with that market moving up consistently. Why did I skip Fossil? Fossil is a good looking chart because observe the obvious again. A bullish engulfing right smack dab off the 50. Today they closed it above the T-line. That's a very strong indication. Same scenario why we recommended DICOM. Bullish engulfing off the 50, closing above the T-line. Bullish confirmation today. So this is not rocket science. This is basically taking the information that the Japanese rice traders provided for us. There's our breakout. There's our 45 degree. How long do you hold FedEx until you see a sell signal and a close below the T-line? Yes, DY is still buyable because if this is wave 1, where do you think wave 3 is going to take you? Somewhere up in this range. Or this could be wave 1. Could take you much higher. How high will it go? My first target is I'll see what it does when it gets here. But that's still, from this level, that's still about a 18% move just to get to the level to see whether it's going to break out or not. So every time I put on a trade, I know the probabilities are in my favor that not only am I going to make a profit on it, but more than likely I'm going to make an excessive profit due to the pattern showing a lot more strength than just merely an uptrending stock. Here's some of the biggies. Netflix. You can see this fry pan bottom. And what has it told us so far? They haven't been able to close below the T-line. It's still in an uptrend. NVIDIA, same scenario. Amazon having a little bit of trouble getting up through this resistance level. But if it opens positive tomorrow with it doing kind of a T-line crunch, tells you more than likely it's going to trade higher. Apple, same scenario. Notice how it has been using the T-line as a support level. Had a doji that closed below the T-line, made it very simple. Had this opened lower today, you could have shorted it. The fact that they opened positive told you your uptrend was still in progress because of the doji rule. And Tesla. Now this one is telling us a little bit of different of a story. It's telling us we're kind of stuck in a wedge. So what's that tell us about the strength of this price move? That wedge formation tells us we're kind of sideways until it breaks out one way or the other. So what we really need to see on a wedge formation is, what is that thing? When they break out of this wedge, that tells us, and look how they broke out of the wedge here. Morningstar signal, gap up through the resistance level, and there's your result. That's on ENPH. We kind of addressed that situation over here on, where are all these? This one, see if I can do it. It's kind of a wedge setup right here, and it broke out of that wedge. Again, with that Morningstar signal off the T-line, what's that imply? That this uptrend is still in progress. An ARWR, same scenario. You kind of see this wedge formation, and look what's happening here. This is where knowing what the nature of each candlestick signal illustrates. What's a wedge tell us? There's no it's indecision. It's not going anywhere. What is the ultimate indecision? A doji. Getting right out here at the point. And what do we know about the doji rule? The price is going to move in the direction of how they open after a doji. They gapped it up and went out through this direction. What do you think the results are going to be? There's still a lot more upside on this wedge breakout. Okay, let's see. We did the biggies. Last one on the biggies area is Roku. Mercy sakes, got more lines on here than... Let's get rid of them. Roku, there you can see the resistance level. It's still heading up to that resistance level. All right, so some of the ones you want to keep an eye on right now. You can see the fry pan bottom setup over here on Kirkland. That one is setting up nicely. Now, I've got these mixed up because I writing them down fast. Here's a J-hook pattern on PLL. Now, this one was interesting. Whoops. This one was interesting because that little move right there, I think, was up 32% on the day. It could move up back up to test this level, but you can see what the percentage moves could be. That could be about a 70% move just to get up back into that range. The reason I'm pointing out these different patterns is a lot of people say, well, and that even today people were saying, there's so many good-looking charts. How do you pick out the ones that you can take advantage of? There's so many of them. Well, if you concentrate on learning 3 or 4, might be the J-hook pattern, the fry pan bottom breakout, the best friend signal, the kicker signal, you're going to have more trades than you'll ever be able to handle. The process from that point is each day you're going to have more trades than you're going to want to put on. So the process will be learning which ones are the strongest of those signals. So not only are we finding good tradable signals, but we're able to cultivate it down to the best of those good signals. So here is, here are J-hook patterns. The buckle incorporated. Where do you think this was taking you? Back up to this range. AVEO. J-hook pattern. Wave 1, wave 2, looking for wave 3. Just being able to identify the pattern setups, again, puts you in a high probability trade situation and in the right direction, and the magnitude of the return is probably going to be more than, again, just uptrending stocks during an uptrending market. Fossil. Whoops. Meant to do fossil. Or did we do fossil? Fossil is the ultimate reversal. There's a bullish engulfing signal right there on the 50, and now bullish confirmation closing above the T line. What's the prospect? Wave 1, wave 2, right back to the 50, now going into wave 3. Now, that's the same scenario with Tupperware. Look where our sell signal was. If you went short, where would you start covering your short position? Once you got down here to the oversold area and you saw a Morningstar signal, you close out the short position. When do you go long? Well, here we are in the oversold area. It's supported on the 34 EMA. Did a doji right here. So if we were trading this, what would be our next move? The doji rule. If it opened positive, what was it telling us? That probably the T line was not going to act as resistance, and if it did a doji sandwich, it was going to close above the T line, and doing a doji sandwich told us probably wave 3 would be in progress. So this just alerts us to when is the optimal time to start buying. And I'm trying to pick out one. Darn, I can't remember which one it was. CB, are you in here? You asked me today which one was home, HOM, bullish engulfing, fry pan bottom. That one you can start looking at. You asked about one today that could you be buying it now? I'm thinking. Was it DQ? Well, it was something like this. And here's the question a lot of people ask, and this is what we try to get away from. People are going to say, well, could we be buying here? And the answer is no. You're in the overbought area. It's already had a good percent move. What you want to do is, if you're looking at a chart like this, you got to ask yourself, this is a good, strong chart, but where should I have been buying? maybe down here, or maybe here. This is probably where you start looking to start taking profits, not buying. So this is what, and I fortunately had the benefit of being the worst investor in the world. That's not working right. Something wrong with that chart. OTRK has a much better looking chart, I think. Not showing up over here. We did bike. Oh, B. So here's one where do I buy here? Well, if we can see that the breakout was right here, yes, this now is wave one, wave two, just broke out into wave three. So there's a big difference between, was it BNTX? A big difference of seeing a pattern breakout versus an uptrending stock that may have already had a price move. I don't think it was this because this one's just now broken out. Was it that PACB? Yeah, I don't even think. Let me. So here's if you were long this one, what would you be doing with this? Well, the answer is you're in the overbought area, and look how you started gapping up in the overbought area. Remember. Remember what our basic rule is? If they start gapping up in the overbought area, where does the exuberant buying come in? It comes in at the top. Number one. Number two, look how far away you've moved from the T line. If you're long, where would be a logical place if it opens tomorrow and trades here to put your stop? At today's open, because logic says if you're that far away from the T line in the overbought area and they've been gapping it up, if there's enough selling pressure to bring it down through this level, the open of today, that means the profit taking has started. Yeah, I don't think it was HIB, because I would have still recommended. Yeah, I probably would have said no. You don't want to be buying here. You want to be holding. I'll try to figure it out as we go along here. Kendai, look at your bobble breakout. This one is a good setup. Look at your little kicker types. I think, no, that's not a kicker. That's more of a piercing signal. Close right here. If it opens positive, you got a bobble breakout. Visto, you're right there at the breakout level on a fry pan bottom. That one you kind of want to watch for positive trading. Again, because you're buying a fry pan bottom breakout. Ruckus, there's your inverted hammer. The reason I point out an inverted hammer is if I see an inverted hammer in the oversold area and they trade positive, you've probably got about a 95% probability or greater that you're going to be trading positive. My stochastics, Avaro is 1233. Now that's nothing set in stone, but somewhere around 30 to 40 years ago, I can't think that can't be that long. I was tweaking. I think charts just started coming onto the internet, and I was tweaking. I was using 1455, but that was a little bit slow for for my trading. So I just sat there one night and said, all right, where does the stochastics kind of correlate with the bottom, and where do they correlate with the top? And I trade 12, 5, 3, 14, 2, 2. Doesn't take very long to change the numbers, but finally came up with 12, 3, 3. This seemed to work the best. No, it wasn't Twillo. It was one that had already run, and I want to say, I'll figure it out. And anyways, the point of that illustration was there's some that when they run and people say, "Oh, I'm making good money in X, Y, Z," everybody wants to jump in because they think it's going to go higher. When the true discipline is, if it's already started to run, I don't see anything on here. Look back and say, all right, where should I have bought this? So the next time you see that setup, you're buying with a little bit more confidence, knowing what the expected result is from that pattern setup. Another little inverted hammer, doji. If this opens positive, probabilities are pretty strong. It's going to come back up at least to the 50, which is testing this downtrend. Occidental, another one that did a piercing signal, gap up. If it trades positive and breaks this downtrend, at least figure it's coming back up to test the 200-day moving average. And Vera, there's your Morningstar signal with an inverted hammer, bullish confirmation. Notice what they did today. I say notice because this is an extra little benefit of analysis. They came right back down, used the T-line as support, and took it back up. If they open this positive tomorrow, what do you got going on? A bullish doji sandwich confirming wave 3 has started. Did the wedges. This would have been one that somebody might ask, should I be buying here? And the answer is no, because it's already had a good percent move. If you own it, you hold on to it, but it wouldn't be buying. Oh, was that it? ENTX? Yeah, I guess that would have been more of, where should I have been buying? Can you buy here? Yes, but it's not your best place to be buying. Hold on, let's see, is this just a request? That one you can be buying because it's just broken out. Hold on, I've just got a few more that are good trade setups. This is Rumble. That one's on wave 1, wave 2, wave 3, right on the support level. And LRN, observe the obvious. Look at all your indecisive trading right here. Kind of hammer signals right smack dab on the 200. Now, look at all this indecision here. Then they've told you what their decision is. What's the probabilities? More than likely, you can trade this one higher up. So I'm trying to make this smaller. Now, where could it bounce to? This is where we don't know whether it's going to bounce here, or yes. If this is our Fibonacci retracement numbers, it could be here, or here. Not that it's going to go to those levels. We don't know which ones it would go to. It's just when it gets to one of these and we see a potential reversal signal, then we've got a pretty good idea that that's where the selling has started, based upon whether it was people trading the Fibonacci's or people trading when it hit a resistance level. Same scenario. Look at all the dojis right here. And look what it was supporting at the 50. Now, this is different because what does everybody have on their charts? The 200 and the 50. So they can see that it's supporting here. The T line is something nobody has on their charts. So that one has a very good reversal, especially if it breaks this downtrend. Wave 1, wave 2, wave 3, bringing you up in this range. So all this information that we get based upon the nature of the signals and where they're occurring, especially the T line as a confirming indicator, works both on the long side or the short side. We can see what happened in Monster Beverage. Kind of a hanging man, gap down. This is what we call a blue ice failure, named by my late friend Dave Elliott of Wall Street Teachers. Somebody's fallen through the ice. What do they try to do? They come up and they try to find the hole they fell through. They can't find it. They drown. Where do they go to? To the bottom of the pond. Do you prefer small, mid? Nothing, Keith. My trading universe is stocks trading greater than 5 and trading more than an average of 200,000 shares a day. At that point, I want to find the strongest signals or patterns. So it doesn't matter what they're in. Yes. So I would always, I've told you all that I would help David with teaching this because I would help them remember this technical analysis of blue ice failure. Would be, how do you catch a polar bear? Where you cut a big hole in the ice. And then you take a can of peas and you spread the can of peas around the hole. And when the polar bear comes down to take a pee, you kick him in the ice hole. It wasn't a real technical explanation, but it helped people remember the blue ice failure. All right, so right now with the market indexes telling us that we're above the T line, the probabilities are pretty strong. We're still going to be in an uptrend. Again, maybe a wave 1, wave 2, wave 3, giving us a good long run. All right, so is there any general questions on candlesticks? Oh, I'll tell difference between a failed doji rule. Well, easy. If this is your doji hammer signal and it opens positive, where should it not trade? Or where should it not close? Back below the doji. If it did, shows you the bulls aren't there yet. This is recorded. The course will be recorded, yes, and there is a training fee. I think it's $497 for the weekend. For members, it's $297. If you buy immediately and a gulf happens, yes, it went the wrong way. And that's one of the things we teach about candlestick analysis is we know that every time we see a buy signal, the probabilities are in our favor that there's a reversal. And so there's simple trading rules that the Japanese race traders have created for us. If I was buying today and it closed back below the halfway point of this candle, remember what this signal told us. The bulls are in control. The Japanese race traders use a very simple rule. If they can close this back below the halfway point of the candle that told us the bulls are in control, the bears are still in control. Oh, they're not favorite patterns because some patterns work. I like the slow curve. That's a little slow curve, and look what the results were. Or the fry pan bottom. The J-hook pattern. The scoop pattern. Now, some of these don't occur very often, but as you can see, when they do occur, what type of results you can get from them. Oh, bike. Yeah, you could be buying this one with the expectation that your first target would be, oh, that's not what I wanted. Now I don't know what pitchfork. I don't even know what a pitchfork is. But that's probably your first target, and then you go back into a 45 degree. Keith, we do a training on entry strategies, 4 quadrants. If the market is opening positive and you think the market should be opening positive based upon the previous day's candle formation, and the stock that has just formed a buy signal opens positive, then you can be buying within first 90 seconds. I usually wait to see it open and make sure it's trading positive. It didn't open and immediately start trading off. If the market opens positive and the stock you're looking at opens lower, not going to buy it until it comes back up through the previous day's close, creating another green candle. If the market opens lower and your stock is opening higher, I'm going to wait to see whether that stock's going to continue higher even though the market isn't. So that could mean I might wait up to 45 minutes. Or if the market's opening lower and the stock you're looking at is opening lower, means you're not going to be buying that day. Not the right time to buy. So it's just everything that is applied to candlestick analysis is just common sense put into graphics. Okay, I guess with that, Jim, let's go ahead and do the double line. And in 4.2 seconds, do the next double line. The Triple T is October 17th and 18th. Yes, a Saturday and a Sunday. Taiwan. Get rid of all these. Taiwan, you can be buying. Obviously, you want to make sure it breaks out through this level, but it looks like it's broken out through most of that level. So if I was buying, I'd just be a little bit careful and watch to see what it does at that point. Oh. J-hook pattern, you can be buying this one on strength. Dang. Oh, it got lines all over the place. Something's happening here, and it's not fun. All right. Salesforce. Nothing great yet. If you're long, you can stay long. If you're buying, I'd wait for it to break up through this level. But you want to see a little bit of strength showing up. Right now, there's not a lot of strength. And Visa, just not a very exciting stock to trade, percentage-wise or directionally. It's kind of been a sideways stock. Change Health. This is what I'm trying to get rid of. There we go. Dang, it's still there. Oh, that's the problem. Okay. So this one you get ready to buy if it opens positive, because there's your J-hook pattern. Look how it did a bullish signal right off the 34, came back up above the T-line. If it opens positive, you've got a doji sandwich, more than likely breaking you up through that level. Econ, you know, another one. Look how you came out of this little slow curve fry pan bottom breakout. So now what you have to be careful of, another thing that we'll be going over as one of the observations, when you start moving up big and then you come back to the T-line, it's apt to move flat for a while until the bullish strength comes back in. A doji gap is not always the best friend, so my question is, how do we determine? It is a betrayal. Well, no, usually it's a best friend. That's why we call it the best friend. Doji gap up is usually going to produce a very strong price move. Etsy, just stay long. Nice fry pan bottom. AMRN, stay long. Another nice fry pan bottom. VPR, stay long. Kind of broke out of a little wedge, rounding bottom. Stay long. Use the T-line as your stop. No signal, but you did have this little kind of wedge breakout. Well, somehow. Beyond Meat stayed up above the breakout level. It still should have some more upside. The breakout level on this fry pan bottom, right about here. So that pretty much tells us we're still in a uptrend as long as it stays above the T-line. Not so much a J-hook. No, there's the J-hook back here. So if this is wave one, what did it tell us about the breakout level? More than likely, wave three was going to be the same magnitude going through that breakout level. That started coming back up. The weed stocks. Let's make this big enough where we can see it. Kind of a cradle pattern. That one I wouldn't be afraid to be buying on positive trading tomorrow. SCPL, just stay long. AMD, you can be buying this one. Let's get rid of that. Something's happening here that is just not working well. What has happened to the... I don't know what's happened. But anyways, oh, I'm sorry, that's AM. AMD. That's a fry pan bottom. You can be buying that one. NVIDIA, staying above the T-line. Still in an uptrend. Workhorse, nothing. You can see you're kind of in a wedge. It wouldn't be long or short. this one right now. And Momo, that one you can be buying also. First target, second target, and then fill in the gap. I don't know why I can't get rid of the trend lines. Nothing yet. If you're long, you stay long. If you're looking to buy, I'd still wait for it to get through the 50. And Ballard, you can be buying this one. Pretty much broke out through this level. Daku, slow. If you like it, you can stay long, but you're running out of steam. It's not a real strong chart. SPI, I don't know what I've done here. What the heck is going on? Huh. I don't know why I can't get rid of the moving averages. What was this? A scoop? No, not really. It's still just consolidation from that initial price move. Apple, you can stay long if you like this one. PLL, that's more of a J-hook pattern. Zulu, Magic, that's a lap. Lulu, if you're long, stay long. You wouldn't be a buyer until it gets up through the 50. And TRVN, that one you get ready to buy if it trades positive. You can see your classic fry pan bottom, wave 1, J-hook pattern going into wave 3. Just make sure your volume stays hefty. This one is a nice breakout. There's got to be something I'm doing wrong. Well. But that's a breakout after a bullish engulfing. Look for a 45 degree to come off of here. Zoom, nothing. You're caught sideways in a wedge. I'd be more apt to buy it above 500. And didn't we do nothing wildly exciting on this one? If you like it, you can be buying it. It's just not showing a lot of energy. And I thought we did app today. It needs to trade positive. If it opens lower tomorrow, close it out. It's failed at the 50. Fly, I forget Fly. Fly, you get ready to buy, especially if it comes up through this level. Look at your Morningstar signal gap up, kind of a scoop type pattern, but you're still looking for positive trading from here. What the heck? Hold on for a second. I got to figure out what I have done. That is. Oh. I don't know what I've done. Gold. Gold is kind of trading relatively flat. It's slowly coming back up. It's not making great moves for the gold ETFs, just kind of flat also. I wouldn't be going long right now. Zoom, as we said, is still kind of caught in a sideways. We did that one. Sure. Still caught in a sideways wedge. CBAT, there's a J-hook pattern. You can stay long on this one with the idea that it's broken out, obviously. So just I would trade this one off my 10-minute chart. CLDX, you stay long on this one. However, if they open this lower tomorrow after 1, 2, 3, 4, 5 indecisive days, I'd close it out. And then I'd just put a buy stop up here. That if it came back up through that level, that's where you could see that it's broken out through that level. Replicagen, you can be buying this one breaking out. Were you looking for that one or this one, Regeneron, where it gapped up? You can buy this one on positive trading after that kind of best friend signal gap up. VMC, stay long. eBay, nothing wildly exciting. If you're long, you stay long because it's pretty much broken out through this. You got a big fry pan bottom setup. MFGP, that one you can buy. Bullish engulfing, gap up. At least look for the next target to be kind of the trend, which is the 50-day moving average. Overstock, nothing. Would not be long or short. There's no direction on this one. And this one is not coming up over here for some reason. And I don't know why. Sometimes they different, they would get AMD corrected. Yeah, but I don't know why they're still over here. Usually the lines, you should be able to click on them and lead them. Just stay long. This is your 45 degree. After your gap up, all you can do is stay long as it stays above the T line. And XHB, if this opens positive tomorrow, you can buy immediately because that would put you into wave 1, wave 2, double bottom, breakout through this level, wave 3, doji sandwich. That would take you higher. That's the home builders. Okay. And PayPal, nothing wildly exciting. If you like it, you can stay long. You can even be buying this one on kind of the little J-hook pattern from here. Your first target would be right here. Silver, starting to come up slowly. Still nothing wild and extravagant. We did AMD. You can buy this fry pan bottom. MGNX, nothing. That's a nothing chart. Didn't we do this on the close today, JB? Still wouldn't be buying this one. Just no direction to it. Is that it? OKTA. That's better. All right. That one still has to break through this level, but if you're long, you stay long. Look at your doji sandwich. Look at your kind of your bobble breakout. Just stay long. Just watch to see what it does here at the resistance level. Alex, yeah, I probably need to do that someday. Just fear of trying to teach an old dog new tricks. There's something. Yep. Trill, nothing great here. You need to see more there because you don't have any real bullish signal here. You can get ready to buy it, but it's not your greatest looking chart. I think there's a lot better. XLV, Bobble breakout. Get ready to buy this one. That's the healthcare sector. And XLK. Kind of a fry pan bottom. Another one you could be buying on positive trading. We did Apple. Just stay long. Make this a little bit smaller. All you can do here is stay long as it stays above the T line. All right. Try use a clicker training. MGK, another fry pan bottom. Oh, Vanguard, not going to make a big percentage move, but if you like it, you can be buying it. That's more of a bullish engulfing. Wouldn't call it a pattern, but you can see where the buying has occurred right here at the 200. Somewhat the same as our recommendation on this one today. Verizon, another boring one. Not going to make a big percent return, but more than likely it's going to come back up if the market stays good, back up into this trend channel, but that only gives you about a not a very big percent return. P-Car, that one you can buy just because it's broken out of this downtrend. Kind of had a little island reversal right here. Notice how you can draw a circle right around this group without touching anything. Because Apple doesn't have a whole lot of energy to it right now. You're getting up toward the overbought area. You're not seeing a whole lot of strength in that. So looking at that chart, it's just telling me I'd rather be someplace else. And VCEL, J-hook pattern working. PQ, still moving in a positive direction. And CLSK, kind of stuck in a wedge. I'd be someplace else, especially, yeah, there's better charts out there right now. Okay. All right. This is telling us we got the prospect of maybe a slow uptrend, which again allows us to get into a lot of bullish charts. So with that, everybody have a great evening. We will see you bright and early in the chat rooms tomorrow. We'll see you then.